Hey investors! If you've been scrolling through Finance X posts or YouTube videos lately, you've probably heard the buzz about YieldMax ETFs. These funds are shaking up the income investing game, offering a fresh way to pocket regular payouts, sometimes weekly, in markets that feel like a roller coaster. Whether you're a day trader chasing quick gains or a long-term investor looking for steady cash flow, YieldMax has something that's turning heads. So, what's the deal? YieldMax ETFs use a strategy called covered calls to generate income from volatile assets like individual stocks, crypto-related companies, or even broad market indices. Think of it like renting out your stock portfolio for extra cash. You sell call options on high-energy assets, collect premiums, and pass those profits on as distributions. It's a tactic big hedge funds have used for years, but YieldMax makes it simple for everyday folks like us to get in on the action. The result? Yields that can outshine traditional dividends, often with a side of growth potential. To dig deeper, I tapped into a recent meetup of YieldMax enthusiasts, everyone from small retail investors with a few grand to big players managing millions. I asked them one question that sparked some heated debates. If you could only hold one YieldMax ETF forever, excluding the superstars MSTY and ULTY, which would it be and why? Their answers didn't just reveal their favorite funds, they gave us a window into how investors think about yield, risk, and the future of markets. Let's dive into their insights and unpack why YieldMax is rewriting the rules of income investing. Before we get to the alternatives, we need to talk about the two giants in the YieldMax lineup. MSTY, tied to MicroStrategy and Bitcoin, and ULTY, built on Tesla. These ETFs are the LeBron and Steph Curry of the YieldMax world, fan favorites that dominate the conversation for good reason. MSTY, the king of yield. MSTY is practically royalty among YieldMax investors. It's tied to MicroStrategy, a company that's gone all in on Bitcoin, making it a proxy for crypto's wild ride. Why do investors love it? For starters, MSTY delivers monster returns. Several folks at the meetup said they've seen over 100% ROI in their portfolios, with one guy joking that MSTY's distributions pay my rent and my Netflix. The secret is Bitcoin's volatility. Those big price swings generate fat option premiums, which translate into juicy payouts for MSTY holders. But it's not just about the income. MSTY also benefits from MicroStrategy's stock price growth, which has been on a tear as more institutions embrace Bitcoin.
One investor, a crypto enthusiast who started investing in 2020, said, MSTY is like owning Bitcoin with a built-in cash machine. It's the best of both worlds, growth and yield.
With Bitcoin adoption growing and volatility showing no signs of slowing, MSTY's high premiums look like they'll keep flowing for years. ULTY, Tesla's high-octane income play. Then there's ULTY, the Tesla-powered ETF that's just as loved. Tesla's stock is a volatility beast, and YieldMax capitalizes on that by selling call options to generate steady weekly payouts. Investors at the meetup praised ULTY's active management, noting that YieldMax tweaks the strategy to maximize premiums while keeping distributions consistent.
One woman, a Tesla shareholder since 2018, said, ULTY lets me profit from Tesla's swings without sweating every dip. Plus, those weekly checks feel like a bonus.
ULTY's assets under management, AUM, have hit all-time highs, a sign of strong investor confidence. Its ability to combine Tesla's growth potential with reliable income makes it a go-to for those who want exposure to a market leader without the full risk of owning the stock outright. As one investor put it, Tesla's not slowing down and neither is ULTY's yield. Since our question excludes these two heavyweights, let's explore the other ETFs that got investors fired up. Not everyone wants to bet their portfolio on a single stock, no matter how exciting. That's where YieldMax's diversified ETFs like YAX and YAG come in. These funds are like a buffet of YieldMax's best ideas, blending multiple single stock strategies into one ticker. They're perfect for investors who want steady income and growth potential without the stress of picking one winner. YAX. The all-star lineup YAX was the clear favorite among investors looking beyond MSTY and ULTY. Think of it as the Avengers of ETFs, a powerhouse mix of YieldMax's most aggressive single-stock bets, covering sectors like tech, AI, and crypto. It's designed to deliver weekly payouts while tapping into the growth of high-flying names like Palantir, PLTY, NVIDIA, NVDY, and others.
One investor, a retiree who's been in the market for decades, said, YAX is my set-it-and-forget-it pick. It's aggressive, pays me weekly, and I don't have to babysit individual stocks.
What makes YAX stand out? For one, it's got a higher risk-reward profile than traditional covered call ETFs like JEPI or JEPIQ. While those funds focus on broad indices like the S&P 500 or NASDAQ, YieldMax zeroes in on volatile, high-beta stocks, giving it more upside during bull markets. It's not uncommon for YieldMax to deliver yields that rival or beat its peers, especially when markets are hot.
Another investor, a young tech worker, explained, YieldMax feels like a hedge fund in an ETF wrapper. I get income, growth, and diversification without needing a PhD in finance.
YieldMax's weekly distributions are a big draw, especially for income-focused investors. Imagine getting a paycheck every Monday to reinvest or spend. That's the kind of consistency that keeps people hooked. Plus, its diversified approach reduces the risk of one stock tanking your returns, making it a smart pick for those who want to play the YieldMax game with a safety net. YAG, the balanced alternative. YAG is like YieldMax's chill sibling. It also offers a diversified basket of YieldMax strategies, but its mix leans slightly more conservative, with a focus on stability over pure aggression.
Investors at the meetup liked YAG for its ability to deliver reliable income without the full intensity of YieldMax. One participant, a financial planner, said, "YAG's my go-to for clients who want YieldMax's magic but don't want to lose sleep over volatility."
While YAG didn't get as much love as YieldMax, it's a solid choice for those who prioritize diversification and steady payouts over chasing the highest returns. Think of it as the slow and steady option in the YieldMax lineup. Still bold, but with a touch more caution. As one investor put it, YAG's like yaks with training wheels. It's great for dipping your toes into YieldMax without going all in. For the thrill seekers, YieldMax's single stock ETFs are where the real action is. These funds focus on one company, using its volatility to crank out big premiums. The trade-off? Higher risk, but also the potential for higher rewards. The top picks from the meetup were PLTI, Palantir, GPTY, NVIDIA, CNA, Carvana, and YieldTY, Robinhood. PLT, riding Palantir's AI wave. Palantir's PLT ETF was a standout, especially for investors bullish on artificial intelligence. Palantir's data analytics platform is a big deal in government and commercial sectors, and some see it as the backbone of future AI systems.
One entrepreneur at the meetup went as far as calling Palantir the Windows of AI, predicting it'll dominate enterprise intelligence the way Microsoft did for PCs.
PLTY's appeal comes from Palantir's wild stock swings, which fuel massive option premiums.
One investor, a software engineer who's been following Palantir since its IPO, said, "Palantir's volatility is like a gift that keeps giving. PLTY lets me cash in on those swings while betting on their long-term growth."
With Palantir's contracts expanding and AI adoption skyrocketing, PLTY could deliver high yields for years. Another investor added, "PLTY's got at least a decade of premium potential. It's a no-brainer if you believe in AI." GPTY, NVIDIA's AI-powered income machine. GPTY, tied to NVIDIA, is another fan favorite for those betting on the AI revolution. NVIDIA's chips power everything from gaming to data centers to self-driving cars, and its stock is a volatility magnet. That's perfect for YieldMax's covered call strategy, which turns NVIDIA's price swings into steady income.
One investor, a tech startup founder, said, "AI's eating the world and NVIDIA's leading the charge. GPTY's my way to profit from that while getting paid."
GPTY's yields are strong, but it's the growth potential that really excites investors. NVIDIA's stock has been on a tear, and even with occasional dips, its volatility keeps the premiums flowing. As one participant put it, GPTY's like owning NVIDIA with a side hustle. You get growth and income in one shot. CNA and YieldTY, the wildcards. For those who love a gamble, CNA, Carvana, and YieldTY, Robinhood, are the ultimate speculative plays. Carvana's stock is a roller coaster, swinging wildly as the used car market ebbs and flows. That volatility makes CNI a premium-generating beast.
One investor, a day trader who loves high-risk bets, said, "Carvana's price chart looks like a heart monitor, and that's why CNA's payouts are so juicy."
YieldTY, tied to Robinhood, taps into the retail trading and crypto craze. Robinhood's platform thrives on speculative trading, which keeps its stock volatile and its option premiums high. One investor called YieldTY a volatility machine, adding, "Robinhood's business is built on chaos, and YieldTY turns that chaos into cash." These ETFs aren't for the faint of heart, but for risk-tolerant investors, they offer a thrilling mix of income and upside. While YieldMax and PLTI were the top dogs, some investors are already looking ahead to YieldMax's next big thing. The most exciting? LovePro, an unreleased ETF that's generating serious hype. Details are thin, but it's rumored to combine leverage with some downside protection, aiming to amplify returns while cushioning losses.
Love Pro sounds like MSTY 2.0. More upside, some safety. If YieldMax pulls this off, it could be huge.
The buzz around Love Pro shows how hungry investors are for YieldMax's innovation. The company's track record with MSTY and ULTY has built trust, and new launches are seen as opportunities to get in early on the next big thing. I'm already setting aside cash for Love Pro. Leverage plus protection, that's a dream combo. Other emerging picks included CNA and YieldTY, which we covered earlier, but also some chatter about potential new ETFs targeting sectors like clean energy or biotech. YieldMax's ability to spot volatile, high-growth assets and turn them into income machines has investors excited about what's next. Not everyone at the meetup was all in on YieldMax. One investor, a veteran with 30 years in the market, threw a curveball by praising Cornerstone's closed-end funds, CRF and CLM, over YieldMax ETFs. These funds offer sky-high monthly dividends, sometimes over 20%, and let you reinvest at a discount through a drip-at-NAV structure.
With CRF and CLM, I get huge payouts and compound my gains by reinvesting cheap. It's old school, but it works.
This perspective was a reminder that YieldMax isn't the only game in town. While its options-based strategy is cutting-edge, some investors prefer the simplicity and proven track record of high-yield CEFs. Still, even this contrarian admitted YieldMax's approach is pretty darn innovative, suggesting he might dip his toes in eventually. So, what's behind the YieldMax mania? After chatting with investors, a few key themes stood out. Volatility is your best friend. Most investors see market swings as a headache, but YieldMax fans embrace them. Volatility fuels option premiums, which means bigger payouts. As one investor said, "The crazier the market, the happier my wallet. Income plus growth equals sign." The dream, YieldMax ETFs aren't just about passive income. They offer exposure to high-growth stocks, blending yield with capital gains potential. It's like getting paid to wait for your stocks to moon. Transparency builds trust. Investors love that YieldMax explains how its funds work, from option premiums to distribution schedules. One participant said, "I know exactly what I'm getting with YieldMax, no black box nonsense." Weekly payouts are addictive. Getting a check every week isn't just practical, it's a psychological win. It keeps investors engaged and makes volatility feel less scary. You gotta believe, the most common advice? Pick an ETF tied to a stock you're bullish on. Whether it's Palantir, Nvidia, or Carvana, your conviction in the underlying asset drives the strategy's success. One investor summed it up perfectly. Find a stock you'd bet your house on, and let YieldMax turn that bet into cash flow. It's that simple. After tallying the votes, excluding MSTY and ULTY, here's how the YieldMax ETFs ranked. YAX, the top pick for its diversified exposure, weekly payouts, and growth potential. It's the do-it-all ETF for investors who want income and upside without picking one stock. PLT. Palantir's AI dominance and volatility make PLTY a favorite for those betting on the future of data analytics. GPTY. Nvidia's leadership in AI and high premiums put GPTY on the map for tech enthusiasts. YieldTY. Robinhood's trading frenzy fuels big payouts for risk takers. CNE. Carvana's wild swings make this a high-reward speculative play. Love Pro. Not out yet, but its leverage and downside protection have investors buzzing. YAG. A tamer alternative to WAX, perfect for diversified income with less intensity. Key takeaways for investors. YieldMax ETFs are changing how we think about income investing. They're not just about safe, boring dividends. They're about turning market chaos into opportunity. Whether you're drawn to diversified funds like YAX or bold single-stock plays like PLTY, there's a strategy for every risk level. And with new ETFs like Love Pro on the way, YieldMax is only getting started.